Right, Harsh. So, I'll take up the bull case for Zomato. Well, Zomato has zoomed in trade today, and a couple of reasons. Firstly, it came out with its Q1 earnings where revenue was up 18%. EBITDA has significantly improved from that 86 crores to 177 crores. Net profit has grown 45%, and margins have doubled from 2.4 to 4.2. Overall, if we see segment-wise performance also, quick commerce has grown 22% QOQ. However, if we see the YOY performance, it's grown 2.5 times. And even if we see the food delivery business has grown around 12% QOQ, however 45% overall YOY. And if we check the monthly transaction user for food delivery, it's grown around 16%. Gross order value has grown around 10%. And if we see the gross order value growth, first we'll go to the segment-wise performance for monthly transaction user for quick commerce, that is Blinkit, it's grown more than 100%, and the gross order value around 4%. And overall also, if you see, in terms of what is playing well for Zomato, it's the Blinkit play that is working. The contribution to revenue from food delivery is around 46%, but Blinkit is now 23% of total revenues, which has grown from 15% in just 1 year. So, this is the major reason why Zomato has turned overall profitable and has seen such a good growth. But Varsha, there's also Swiggy coming in with intense competition. What do you have to say?
Yes, Mahima. So what all you said is actually appreciated, but one needs to think that Swiggy is coming with its IPO. The issue size is around 10,000 crore, and Swiggy is giving good competition when it comes to food delivery and quick commerce to Zomato as well. Even we have Zepto on the table, which is actually giving good competition. And if one has to see the numbers what Swiggy has posted, so revenue from food delivery and quick commerce has increased almost 35% in FY24, while if you see operating losses dipped from 2,500 crore to rupees 1,500 crore. And also according to some reports, for example, Macquarie sees increased competition for Zomato. Now this is on the back of JioMart coming with food grocery delivery, which is they're going to plan to offer in 30 minutes. So this is one of the risks that Zomato have. And now back to you.
Right. So, while there is some kind of competitive intensity when it comes to Swiggy coming out with IPO, but I think when it comes to the quick commerce space, Blinkit has an upper edge because of the kind of guidance that the management has said. They're increasing the dark stores. They've guided that they'll increase the dark stores to 2,000 from the current 663 mark. And overall, also the kind of speed with which Blinkit delivers right now is much faster than what Instamart and JioMart is doing right now, and the kind of expansion that Blinkit has right now in terms of dark stores is much higher than these platforms specifically. So first thing, that, and management has also guided that they are expecting 20% growth in the near term in the food delivery business as well. Plus, in the start of the show, Harsh also mentioned that brokerages are also bullish on the stock. If we see Citi is extremely bullish given a target price of around 270. It estimates FY24 to 27 estimates food delivery growth, GOV growth, that is the gross order value growth, at around 20%, and that gross order value growth is estimated at 50% plus CAGR for the quick commerce. Moving on. They've also said that they expect consolidated adjusted EBITDA to grow at 55% of CAGR, which is quite a significant number to grow at. Moving on, we also have a couple of brokerage notes which are again bullish on Zomato. Nomura has valued the food delivery at $14 billion, and quick commerce, that is Blinkit, is not far away. They valued it at around $13 billion. We also have CLSA, which has raised its earnings estimates by 6 to 36% for FY25 and 27 estimates. And CLSA is one of the brokerages which is extremely bullish with a target price of 350, which is almost a 47% upside from its yesterday's closing. And they've said that the target is an equal weight blend of both DC and the FY26 PE. And overall, if you also see, Axis Capital is also bullish. They've given a target price of 287, and they've raised the FY25 to 27 estimates top line by 7 to 12%. So despite the kind of growth that Zomato has seen today, brokerages are still bullish. But Varsha, the valuations right now for Zomato do look expensive.
Yes, absolutely. So if you see from valuation perspective, if I even consider price to sales, at current valuation, at current multiple, it is trading at 18x. Even if I have to consider FY26 numbers, we are actually giving 8x of basis FY26 numbers. Now, I was just one of the hedge fund managers also mentioned, that it will take 230 years to recover your money basis, FY24 numbers that Zomato will be posting on an annualized basis, and considering price to sales, it will almost take 15 years to recover your money. Now, if you see, also one of the things that I think that is the bear case when it comes to Zomato, that the growth Zomato has beyond tier 2, tier 3 city is like, there's no growth beyond tier 2 cities, because I think at some point of time the growth for Zomato will be finite. I don't think so that Zomato will have 2x or 3x fold after it will achieve a certain market share.
Right. So just to conclude, while the stock has literally zoomed in trade today, valuations do look expensive for the stock, Tamanna, as of now.